Hello guys, welcome to my channel To The Point. Today we will try to understand some important questions of central banking subject. I'll give explanation and also share important data wherever necessary. I will release a series of videos and try to cover as many topics as possible. So I request you to please turn the notification bell on so that you don't miss the upcoming videos in this series. Okay, so let's start our video. The first question is, the term banking is defined under dash of Banking Regulation Act 1949. The options are Section 5B of Banking Regulation Act 1949, Section 5B of Banking Regulation Act 1950, Section 5B of Banking Regulation Act 1948, and Section 3B of Banking Regulation Act 1949. So here the answer to this question is option A, Section 5B of Banking Regulation Act 1949. Few more things I would like to add to this. Actually, the Banking Regulation Act 1949 came from Banking Companies Act. Initially, Banking Companies Act 1947 was there. 1949 Banking Companies Act 1949 was there, and later on in the year 1966 it was modified, and the new name it was given was Banking Regulation Act. So Banking Companies Act of 1949 later on got modified and it was renamed as Banking Regulation Act 1949. Actually this was done in the year 1966. Okay, and this Banking Regulation Act has total 56 sections in it. Total 56 sections are there in Banking Regulation Act. Okay, so I would like to repeat this. The Banking Regulation Act 1966 was initially called as Banking Companies Act 1949. Okay, and this Banking Regulation Act has total 56 sections in it, and the term banking is defined in the Section 5B of Banking Regulation Act 1949. Okay. Fine, the answer is option A. Now let's see the next question. The second question is, the committee recommended the dash committee recommended the amalgamation of RRBs promoted by sponsor banks. We have to tell the name of the committee that has recommended for amalgamation of RRBs. The options are Narasimham Committee, B. Sivaraman Committee, Verma Committee, and Janaki Raman Committee. Now here, the answer to this question is Narasimham Committee. So what are they asking? What are they asking? They are asking, amalgamation means combining or unifying. So they're asking what is the name of the committee that has recommended to combine all the RRBs. The name of the committee is Narasimham Committee. Okay. Now, who is the father of RRB? Now, M. Swaminathan is the father of RRB. Okay. Now, how is RRB formed? I mean, the owner of RRB, the RRB is owned by Government of India, sponsor bank, and state. The government has 50% share in the 50% of ownership. The sponsor bank has 35%, and state government has 15% of ownership. Now after that, this man Narasimham is actually he used to be the governor of RBI. So this man in his career, he has done lot of reformation in banking system. So this man is called the father of banking reforms in India. Banking reforms, the father of banking reforms in India is Narasimham. If any question comes to name the committee, and they have given some of the reformation in the banking system. You do not know which committee is we do not know the answer to that question. Then if it deals with any banking reformation, then you can give a wild guess by opting the Narsimham committee, because this man has did lot of banking reformations. So that's why there is a possibility that the answer can be Narsimham committee. I am telling you that the cases where you do not know the answer, then you can do this. Okay, so I think you understood. In short, I will repeat everything once. The committee, the question says that Narsimham committee is the committee that has recommended to combine all the RRBs. Okay, and this RRB is owned by government, sponsor bank, and the state government. Government has 50% share, sponsor bank has 35, and state government has 15% share. Again, the father of RRB is M. Swaminathan. This Narsimha, this man, Mr. M. Narsimham, he is the ex governor of RBI, and this man is called the father of banking reforms. For no, banking, the father of banking reforms in India. Okay. Now, next slide. Next question. The best way to reduce inflation according to the multiplier model is to increase aggregate demand by cutting government spending or raising taxes. Decrease aggregate demand by cutting government spending or raising taxes. Increase aggregate demand by raising government spending or cutting taxes. Decrease aggregate demand by raising government spending or cutting taxes. Here we can see that there is raising tax, cutting tax, cutting tax. The question asks us which is the best way to reduce inflation. If they want to reduce the inflation, and by using the multiplier model. So here you see, if the tax is decreased, here there are two options: either it will increasing or it is cutting. If the taxes are increased, then lot of then money with the people decrease. If money with the people will decrease, then that will result in reduction of inflation, indirectly result in reduction of inflation. So what we want, so that is what we want. So that is why raising tax is what we will support, reducing inflation. So out of this two, one mission should be the answer. Cutting of tax does not serve the purpose. Okay, now what they are saying, increase the demand by cutting government spending, decrease the demand by cutting government spending. See, increasing the demand will not reduce inflation. So that's why the answer should be decreasing aggregate demand by cutting government spending on raising taxes is the answer. Okay, this is the answer. Now if you see logically also, the meaning of this line supports the reduction of inflation. Okay, so this is the answer. Now what we have now here, what we should know is, what is multiplier model. If suppose any of the theoretical question comes referring to the multiplier model, then if you do not understand the question, then I will tell you a simple line. It will help you in solving the understanding the options. Okay, in case of multiplier model, the most simple definition is, when economy flourishes, the government's expenditure also increases. Okay, is more. Okay, when the economy is not flourishing, at that point the government's spending is also decreasing. Okay, so they both have direct relationship. You should remember this. This will do. Now here what they have written is, they have written to reduce inflation. Reduce inflation, so means the flourishing of economy is downwards. That is why government's spending will be downward. Okay, so that is why option B. See here it is written, decrease aggregate demand by cutting government spending. By cutting the government spending, once again, by cutting the government spending or raising taxes. So, B is the answer. Okay. Next question. The first Indian to estimate the national income of the country was. Here, the answer to this question is Dadabhai Naroji. Okay. The answer to this question is Dadabhai Naroji. Now, what we should be careful here is that what they're asking in the question. The first Indian to estimate national income, the national income, here before independence I have written. In exam it won't be given. So be careful. Okay. So what I mean to say is, in general, who is the first Indian to estimate national income is Dadabhai Naroji. He did that in the year 1867. Okay, long back he did that. Okay, the answer to this question is option A. Okay, option A. Now let's see the next question. There I will explain. Now here they are saying, after independence, the first National Income Committee in India was headed by. Now here the answer is P.C. Mahalanobis. So what I want to say is, the first Indian who estimated national income. The first Indian who estimated national income was Dadabhai Naroji. Okay. Then the first Indian after independence. So this happened in 1867. That is before independence. This happened before independence. But then after independence, the National Income Committee was formed. National Income Committee was headed by this P.C. Mahalanobis. Okay. Now again we have one more thing, that this Sir Richard. This Sir Richard is called the father of national income. He is called the father of national income. Okay. And this man, VKRV, this man is the first man who has given scientific approach for calculation of national income. So he was the first one to give the method for calculation of national income. Okay, so don't get confused here. The probability of asking this is less. So remember everything. Okay, let me repeat everything for you. The first Indian to estimate national income is Mr. Dadabhai Naroji, and then Sir Richard Stone is the father of national income, and then this man P.C. Mahalanobis is the man who formed a committee and gave us the first national income. He has also given the first national income, but after independence. Okay, after independence this man gave, and this man VKRV Rao is the first one who calculated, who actually calculated the national income, using a scientific method. Okay, so let's move on to next question. The answer to this is P.C. Mahalanobis. The next question is, who is the father of national income? Now only I have told you the father of national income is Sir Richard Stone. Okay, we understood this. So the answer is Sir Richard Stone. Answer B. Now next, which method is not used for estimation of national income? Which method is not used for estimation of national income? Expenditure method, production method, income method, and inflation method. So here, this inflation method is not a method for estimation of national income. Expenditure method is there, production method is there, income method is there, but there is no method called inflation method. So they are saying which is not a method of estimation of national income. So this inflation method is not a. So the answer is inflation method. This inflation method is not a not the method used for estimation of national income. Okay, now here one more thing I would like to say. If they ask you what are the methods for estimation of national income, then these three are the methods. These three are the only methods. So if the question comes that what are the estimations of which methods are used for estimation of national income, which methods are used for estimation of national income, then the methods used for estimation are expenditure method, production method, and income method. You can remember this as pi, that is I, P, and I. Production method, income method, and expenditure method. Okay, these three methods are used for estimation of national income, and since inflation, there is no method called inflation method, so that is the answer. Next, name the bill by which the government of India collects the revenue of a year. So here we have to tell the name of the bill. So just use logic itself. They are saying we have to tell the name of the bill, that is Government of India, not RBI. The Government of India collects revenue. So usually if Government of India is anything associated with Government of India is fiscal policy. So similar to that is finance bill. Okay, fiscal FF like this. So you can remember this as finance bill. Okay, so the answer to this question is name the bill by which the Government of India has collects the revenue for a year via the bill finance bill. Okay, finance bill is the ultimate answer. Okay, now let's see the next question. How is the national income determined? Now, how is the national income determined? Here, I want to tell you the definition of national income. The simple definition of national income itself says that national income means the value of goods, and services. Okay, goods and services. So the value of goods and services produced by a country during a financial year. In a particular financial year, the value of the goods and services it has produced gives us the national income. So here the options says revenue from state, goods and service production, revenue from other countries, none of this. So the answer should be goods and service production. Okay, so the answer to this question is option B, goods and service production. Okay, this one. Now the next question is, which of the following represents the standard of living in a country? Which of the following represents the standard of living of a country? This is also an important question. The options are poverty ratio, per capita income, national income, and GNP. Now I want to tell you what is per capita income. The per capita income is the average of income. Capita income. The formula for per capita income is national income upon population size. Okay, the national income upon population size will give us per capita income. Okay. Now next question. In India, the per capita income was low because of population growth, of population decrease, of regulation growth. More people are in rural area. Now here, now only we have seen that the per capita income tells us about the standard of living. So definitely population decrease was never an issue for us. For population growth can be there, regulation growth is not possible. More people are in rural area. So we came to know that per capita income is associated with standard of living. So here they say that our standard of living, our per capita income was low because more people are in rural areas. At that point, more people were in rural areas. So our per capita income was low. Okay. So the answer is option D. Now next question. The members of the Monetary Policy Committee hold office for a period of. The members of the Monetary Policy hold a period for 3 years. Okay. So you have to remember this. They hold the party for 3 years. They hold the office for 3 years. How can you remember? I'm just telling a weird trick. Monetary Policy Committee has 3 letters. So remember 3 years. The members of the Monetary Committee policy hold office for a period of 3 years. Now next question. The answer is D. The following is used as the most preferred monetary policy target by central banks. The options are bank credit, bank reserves, interest rate, money supply, or monetary aggregators. So here what are they asking is which of the following is the most preferred monetary policy target by central bank? Which is the most widely and popularly used monetary policy target by central banks? So, what is the what's the main target of monetary policy is the monetary policy's purpose itself is to manage the supply of money in the economy. So this money supply option will be our answer, because what does monetary policy do? Monetary policy by RBI uses several tools, and using those tools they try to manage the money supply in the economy. With this money supply, management of money supply, the inflation depends on the money supply in the market. So that is what we do. Okay, so as the question said, what if the main preferred work of the most preferred monetary policy target is, the most preferred monetary policy target is money supply. So the monetary first focuses on the money supply. Now next question. The study group set up by the Reserve Bank in August 2017 recommended the following external benchmark rates: MIBOR CD rate and 11 other rates, RBI policy repo rate and 2 other rates, CBLO and 5 other rates, weighted average call rate and 6 other rates. So here the answer to this question is A, that is MIBOR, CD rate and 11 others rates. Here this word called external benchmark is used. External benchmark means comparing one organization with another. Okay, so what are the rates that Reserve Bank has recommended for comparing the performances? And those rates are MIBOR, CD rate and 11 other rates. Okay, now let's see the next question. The central government gross fiscal deficit GFT as a percentage of GDP during the financial year 2020-23 is expected to be. Remember this full form: gross fiscal deficit as a percent of GDP during the year 2020. This recent one, 2022-23, is expected to be 6.4%. Okay, the answer is option D. Try to remember these figures. Now next question. The following chapter of the RBI Act 1934 deals with the central banking functions. So the answer to this is chapter 3. Okay, so I'll tell you. The chapter, what are they asking is, in the RBI Act 1934, central banking's functions are written in one of the chapter. What is the chapter? The chapter is chapter 3. How can you remember this? RBI, what we are talking about, central bank. Okay, we are RBS, we are talking about central bank, and which is C. The chapter is also, the chapter word starts with a C, and the alphabet C is third alphabet of the series after A and B. After A, B, C, we have the number for the place value of C is 3. So chapter 3. Okay, C and C when comes, then the answer is 3. Okay, this way you can remember. Also I want to tell you that the RBI, the total number of sections in RBI Act 1964 is 61 sections. In this total 61 sections are there. Previously I told you that 56 sections are there in Banking Regulation Act. Now this is RBI Act. RBI Act has a 61 sections, and which chapter is used for central banking functions is C, and C is there. So 1, 2, 3. Chapter 3 of central banking functions. Okay. Now the answer to this question is option C. Next question. The following novel system was launched by NPCI for easily and securely transferring funds through mobile banking. The options are account number and bank details, virtual payment address, account number and IFSC, PAN number and IFSC. So here actually they are talking about the UPI payment. Okay, the actually NPCI has launched the UPI transactions transferring, and that is what written here, that is the most securely transferable fund through mobile banking. So virtual payment system, virtual payment address here refers to the invention of UPI. Okay, the full form for UPI is a unified payments interface, and then I will repeat everything. The following novel system was launched by NPCI for easily and securely transferring funds through mobile banking. So in order to easily transfer the money, the bank has launched NPCI. Okay, and bank has launched us a new thing with the help of NPCI, and that is virtual payment address, which is used in the UPI payments. Okay. Now next question. NPCI was set up first to protect banks from possible fraudulent transactions as an apex umbrella institution for integrating all retail payment institutions, to monitor large volume transactions, to redress customer grievances. The correct solution is as an apex umbrella situated for integrating all retail payment system. See, NPCI means National Payments Corporation of India. Okay, so National Payments Corporation of India, so work is not to solve problem, not to solve frauds, or not to monitor large transactions only, or to address customer, or I have to deal with customers, redress customer grievances. Okay, so the answer is option B, as an apex umbrella institute for integrating all retail payments institutions. That is how the CPI works. Okay, so answer is B. The next question is, the following supervisory body was established in USA in the year 2000. So in the year 2000, a supervisory body was established in USA in the year 2000. So what is the supervisory body? The supervisory body is FSA. FSA is the supervisory body established in USA in the year 2000. The question is, under inflation targeting framework, the following institution in India determines target: government, the central bank in consultation with government, Financial Stability Forum. So what are they asking is that if in the inflation targeting framework, what are the targets are there, na? So who determines the targets? So whatever whatever occurs in this inflation and all, they all come under RBI, and then okay, RBI means the central bank, but the central bank cannot take such important decisions on its own. So central bank will consultation with the government, will tell us the inflation targeting framework, and also and also the target that is to be set. I will explain you in detail. This inflation targeting framework means what? Inflation targeting framework means it is RBI has a strategy and accordingly he sets a inflation rate which is a little higher figure. So RBI sets a inflation rate, and then it has monetary policy under it. So it will keep on changing the monetary policy in such a way, uh, such a way that the in this that this inflation rate can be attained. So inflation targeting framework means inflation rate is set, and then via changing the monetary policy, RBI tries to attain this target. Okay, and who does this? The central bank does this, but it asks the government also. Okay, it consults with the government. Okay. Let's move on to next question. On which date was the Reserve Bank of India established? This is an easy question. So the Reserve Bank of India was established on 1st April 1935 under the Reserve Bank of India Act 1934. Okay, RBI Act is 1934, and the RBI was established on 1st April 1935. Now next question. The national income of India is calculated mainly through. The national income of India is calculated mainly through production and income method, production expenditure method, none of this. We have seen in that national income, that national income of India is calculated by production and income method. We have seen that pi, that is there are three methods for national income. Out of this this P and I, which again is pi. So instead of PIE, we will go for again PI. That is production and income methods are used for national income of India. Okay, the production in the P, in this pi, the national income of India is calculated through production and income method. Okay, now next question. In India, the system of the budget was introduced during the viceroyalty of. So this you have to remember. During the viceroyalty of Canning, this was done, and this is a very old thing which happened in around 1860. Okay, very old, 1860. So the Viceroy of Canning will tell us the system of the budget. Okay. Now next option. Next question. The East Asian crisis stemmed from the following event: housing bubble, government deficit, large private sector deficit, high debt to GDP ratio. So the answer to this question is large private sector deficit. I want to tell you something. This East Asia crisis is this crisis started in the country Thailand. First it started in Thailand, and then it started spreading into other Asian countries. And the main problem with this crisis is that it was a currency crisis. That is, in these countries the value of their currency fell drastically against the US dollar. So their currency fell against the US dollar, and this was a currency crisis which was very famous. So this East Asian crisis stemmed into the following events, and the answer stemmed from the following events, and the answer is large private sector deficit. Okay, so guys, I would like to request you to please subscribe the channel. because once you will subscribe, then you can press the bell button and get notified. Getting notified is important because I'm going to upload other continuation videos also, so you should not miss them. Okay, and thank you so much for cooperating. Once one more thing, I would like to give a short revision of all of the complete video, so that revision is very important, so you don't forget it. Okay, so I'll give a very fast revision. Okay, so let's start the revision. The term banking is defined under the Banking Regulation Act 1949. The answer is Section 5B, Banking Regulation Act 1949. Here we came to know about the Banking Companies Act, which was formed in 1944, and this Banking Regulation Act was formed in 1966. Total 56 sections are there. Okay. Now next question. The committee recommended the amalgamation of RRBs promoted by sponsor banks. The answer to this question, Narsimham committee. This man Narsimham is called the banking father of banking reforms in India, and the RRBs, the form the what we call it, the committee for recommended for amalgamation means combining of RRBs is called as Narsimham committee. Now the father of RRB, the father of RRB is M. Swaminathan. Was M. Swaminathan. This man Narsimham is called as the father of banking reforms in India. Okay. Now next question. The Dash committee recommend. Sorry. The best way to reduce inflation according to the multiplier model method is, the multiplier model method says that if economy is increasing, then government's spending will also increase. If economy is decreasing, then government spending will also decrease. So here we can see that they want to reduce inflation. So if inflation or economy they want to go in the negative direction, then the government spending will also go in negative direction. So a negative direction, and over that the rising prices is what something we want. Okay, so B is the option. The next is the first Indian to estimate the national income of the country. The first Indian to do this was Dadabhai Naoroji, and then Sir Richard Stone was the father of national income, and then V.R.K. Rao is the first person to give scientific approach for scientific calculation of national income. So he did the calculation of NI for the first time. Okay, now next is, after independence, the first in national income committee India has headed this by P.C. Mahalanobis. Sorry, P.C. Mahalanobis did the first national income committee in India was headed by. So after independence, it was headed by P.C. Mahalanobis. Before independence, it was by Dadasaheb Naoroji was the first one. Dr. Richard Stone is the father of national income. This man is called father of national income, and this V.K.R.V. Rao is the one who has given us the approach for calculation of national income. Okay. Now next slide. Who is the father of national income? So now only told Sir Richard Stone is the father of modern income. Then next, which method is used for estimation of national income? So the first three methods here are the actual methods of teaching, and then this inflation method. Sorry, this is the which method is used for estimation of national income. So these three are the different methods used for estimation, and inflation method is, there is no such method. In all, there are only three methods, and these three methods are pi, that is production method, income method, and expenditure method. Okay, now the next topic is question is, name the bill by which Government of India collects the revenue of a year. The Government of India does that using the fiscal bills, as government only deals with the fiscal policy also in that way. Then The next question: how is the national income determined? National income, the definition of national income itself says that the goods and services produced in a region in a given financial year. So here the national income determines the goods and services. Okay. Next question: how is the what which of the following represent the standard of living in a country? Now, the standard of living comes from the net capita. Which of the following represents the standard of living is represented by per capita income? The per capita income tells us the standard of living of the standard of living. The per capita income's formula is average national income upon the size of the population. Okay, is called as per capita income. This tells us the per capita income tells us in a given region the average income of every individual. They tell us the average income of the individual. Okay, per capita income. Now next. In India, the per capita income was low because more people are in rural area. Okay. The next question: the members of the Monetary Policy Committee held office for a period of 3 years. The following is issued as the most preferred monetary policy target by central banks. So, most preferred monetary policy. Monetary policy itself deals with supply and money supply. So, the answer is money supply. The study group set by the Reserve Bank in August 2017 recommended the following as external benchmark. So, the answer is MIBOR, CD rate and 11 other rates. Then the central government gross fiscal deficit as a percentage of GDP during the fiscal year 2022-23 is 6.4%. The following chapter of the RBI Act 1934 deals with the central banking function. So the chapter for this is RBI chapter number 3 and the RBI Act 1934. Again, the RBI was formed on April 1st, 1935. Okay. Next. The following novel system was launched by NPCI for easily and securely transferring funds through mobile banking. Here, easily and securely transferring funds through mobile banking, this means they are talking about UPI. So, the answer is virtual payment address. NPCI was set up to protect banks from possible fraudulent transactions as an apex umbrella institution for integrating all retail payment institutions, to monitor large volume transactions, to redress customer grievances. NPCI actually is an apex umbrella institution for integrating all retail payment institutions. Now, the following supervisory body was established in USA in the year 2000. The answer is FSA. Now, the lender of last resort function of central bank associated with the problem of lender of last resort means ready to give, ready to help out, and moral hazard is the answer. Moral hazard is a problem, that is since support is there, so aggressively risks are taken. It is called as moral hazard. Under inflation targeting framework, the following institution in India determines target. The inflation targeting framework itself means that the RBI sets an inflation target and then it keeps on changing the monetary policy and try to attain that inflation rate. Try to attain that inflation rate. Now we have to tell that this inflation target is set by whom. So since this inflation targeting framework is completely a central government, so under the central bank, so here it will be targeted by central bank, but she will discuss with the government, and then we'll carry on. Next question: on which date was the Reserve Bank of India established? That is option C. Okay, now next, the national income of India is calculated mainly through production and income method. And in India, the system of the budget was introduced during the viceroyalty of Canning. The East Asian crisis stemmed from the following event: housing bubble, government deficit, large private sector deficit, and high debt to GDP ratio. East Asian crisis started because of large private sector deficit. So, thank you so much, friends. Have a nice day.